Chipotle beating fourth quarter estimates, but shares falling after forecasting disappointing same-store sales growth for 2025. The company warning that they could potentially see roughly 60 basis point impact on raw material costs this year if proposed tariffs on Canada and Mexico do take effect. Joining us now, we want to bring in Adam Rymer. He's Chipotle's CFO. We're also joined by Yahoo Finance executive editor Brian Sozzi. Great to have you both. Adam, let's talk about the quarter and maybe the share reaction that we're seeing this morning. A lot of that focused on the guidance that you gave, but zeroing in on some of the tariff commentary, because tariff threats by the Trump administration clearly adding some uncertainty to that macro picture. How are you navigating that?
Yeah, so at this point, we're keeping a close eye on all of the different changes between, the proposed tariffs on Mexico, on Canada, as well as China. And we gave some pretty good commentary in the prepared comments for the script, which we had about 2.5% of our sales or so come from these areas. And so these proposed tariffs, like you said, would constitute about a 60 basis point impact on our margins. So we're keeping a close eye on how this would go. And we're also, not going to necessarily react quickly with price. We're going to be very, very patient when it comes to this to get an idea if these are going to be permanent or if they're not going to be enacted at all. And so we're going to sit tight. And luckily, because we operate our own restaurants, we have a strong balance sheet. We have the ability to do that.
Adam, take us inside the past, let's say, 4 days of being the CFO of Chipotle. One day, we had tariffs across the board. Then we had no tariffs. Then we had tariffs somewhat going through. What have you been doing? Take us inside some of the operating procedures you've been putting in place. Have you had to have emergency calls? I imagine it's got to be pretty chaotic right now.
Yeah, there are definitely a lot of ups and downs, especially preparing for earnings. And luckily, we have an unbelievable finance team and a supply chain team that we had all the scenarios mapped out. And so as we were getting closer and closer to the call and we were seeing, okay, the tariffs seem like they're coming live. Wait, no, they might be falling off, or it's just going to be China, not Canada and Mexico. We just pivoted up until the last second. And again, I give a big shout out to our teams for allowing us to make that a very seamless process.
Is it impossible to plan in this backdrop?
I wouldn't say it's impossible to plan because we're going to continue to do what it is that we do. Operate great restaurants, really focus on the things that we've got ahead of us, an amazing marketing plan for the year, exciting LTOs that are coming, executing on throughput. I mean, those things are what's front of mind. And we'll react, as the tariffs come in, we're able to absorb these costs for a very long period of time before we decide, okay, do we need to make a change to our business? But that's really where our focus is operating great restaurants each and every day.
Adam, looking through to how that operation played out and some of the figures that came through these highlights as well during the quarter. Average check growth, 1.4%. That was higher than the street's expectation. The traffic growth was just a smidge lower than the street's expectation. I wonder, as you're kind of balancing and looking through that check growth number, is this a matter of pricing or is this a matter of appetite that you're seeing from consumers?
No, I mean, we're really proud of the results that we put up in the fourth quarter. As you said, we had over 4% transaction growth. And when you look at the full year, it was actually over 5% transaction growth. And that's really tough to come by in the industry right now. I mean, everyone's fighting over every transaction. But there was a little bit of weakness at the end of the quarter, which we called out due to really factors outside of our control. And that was the calendar shift around the holidays. When Christmas moves from a Monday to a Wednesday, as well as New Year's, there was an outsized holiday impact. And so that's really what brought a little bit of pressure on our transactions from what Wall Street was expecting. But again, we believe that we are executing really well in our restaurants, and we're really proud of these results.
Adam, going back to what you just said a moment ago, when it comes to pricing and your strategy then going forward, you said you're going to absorb it until you can't. At what point can you not absorb those higher costs?
Yeah, I mean, the way that we look at pricing is simply to offset permanent hits to the business. And so we don't want to grow our margins by taking price increases. We simply want to offset the impact of inflation. And so given how fluid the situation is with tariffs, we will give it a very long time to determine whether or not this is going to be a permanent hit to the business. And if so, then we'll look at, okay, can we offset this additional expense through efficiencies within our restaurant or some other means? And then really it comes to the last resort is pricing. We're very careful with when we take a price increase because we really want to maintain that value proposition that we have amongst our peers and in the industry.
It seems like across the industry, there's more of a focus on what is being offered to the consumer, the menu as well. Do you see the need to trim any menu, decrease limited time offerings even that you've been so well known for Chipotle, putting some of those LTOs into the market?
I really don't think so. One of the beauties of Chipotle is we actually have an original menu. Jack was able to find it about a year ago from July of 1993. And what's amazing about looking at this menu is our menu has not changed very much since then. We've added a couple of limited time offers on a yearly basis and a couple other items like queso and brown rice. And so that's the beauty of Chipotle is the simplicity of our menu so that our teams can can execute every day when it comes to great culinary, prep in the morning, different things like that. And so I don't think we're looking to trim anything. If anything, we're going to continue to lean in on these limited time offers a couple of times a year.
Adam, before we let you go, just going back to the tariff discussion, do you need avocados from Mexico, if at all? And then secondary, bigger picture, what type of changes do you think tariffs will have to the broader restaurant industry supply chain?
Yeah, so avocados from Mexico is really interesting. So if you go back several years ago, probably 90% or so of our avocados came from Mexico. It's closer to 50% today because we've diversified to different countries of origin for obvious reasons, just making sure that we have a really good supply and that we're not completely dependent on one region. And so through those efforts, we'll continue to make sure that we're diversified, but it's not something that we could switch very quickly, but we've done that over time and we'll continue to do that over time.
Adam, great to have you here with us today. I got to continue to keep asking how I get them to add more onto my burrito without kind of doubling the meat.
You just give them more, Brad. Just give them more money.
That's
They'll double anything you want, Chipotle.
Yeah, well, I've seen your orders before. Adam.
Yeah, Brian knows.
I do, actually.
Adam, thanks so much for taking the time. Brian, appreciate it.
Definitely. Thanks, guys.
Sure.